Hi there, you're watching Dukascopy TV's Commodities Corner, a twice-weekly interview aimed at bringing you a unique viewpoint on the commodities market. Well, today precious metals are once again in our sights, and the most popular of the bunch, gold, has surged amidst a possible military intervention from the US in Syria. Well, joining me on the line for his expert opinion is Alistair McCaig, a market analyst at IG in London. Alistair, welcome. Now, it would be silly not to start off with a look at gold first. It's been pretty amazing to have seen gold go from major safe haven status last year to reaching a 4-year low earlier this year, dropping to almost $1,200 an ounce. Are we now on a continuous bullish streak, do you think?
I think continuous is maybe a little bit on the optimistic side. It still has some pretty large hurdles it has to clear as far as breaking the downward trend that it's been stuck in for effectively the last 12 to 18 months. But the price action that we've seen in the last month or so certainly is quite encouraging. That it is making a real challenge for breaking this negativity that's hung over it for so long. Having said that, we would like to see this continue when we get more into the middle of September. We start to see trading desks around the city, not just in London, but globally, fill out a little bit again, and we start to see volumes creep back into the market. And then I think we could feel a little bit more convinced. Obviously, there are macro issues out there that will play a large part in what the sentiment towards this sort of safe haven of gold is, and obviously the uncertainty that hangs over Syria and therefore the Middle East at large will undoubtedly play a large part in the strength of this precious metal going forwards.
So what are your projections for gold against the dollar then?
I think short term, we've seen a really good run. It wouldn't be too surprising if we see some sort of correction in the natural ebb and flow as far as a technical viewpoint is concerned. Having said that, we have got the more destabilizing issues of Syria and the impending military action that seems likely to start. Taking a further afield look, we have obviously seen almost all of the major gold mining companies out there reassess their book values of the assets that they hold, and therefore on the back of that they've also reassessed the ongoing financial viability of a number of their operations, and this in itself has effectively curtailed the volume of physical gold that's gone into the market. Now, over the last couple of years, the physical gold side of the market has been superseded by effectively paper gold, meaning that there's been plenty for the momentum traders to become involved in. Having said that, though, the demand for physical gold from the Asian markets had been substantial. It cooled off for a period of time as we saw a reflection of a slightly cooling Chinese economy, and the market demand there subsided slightly. Also, we saw in conjunction with that the likes of the developing nations' currencies come under some real pressure, and they still are under some real pressure. And for instance, the likes of the Indian rupee against the US dollar has weakened dramatically, therefore weakening the purchasing power of the Indian subcontinent, one of the biggest fans of physical gold out there. So I think with Chinese economy just beginning to show some real signs that it's stepping up the pace again, it wouldn't be too surprising if we saw demand from China for physical gold begin to creep back up again. Much more of an uncertainty, I think, is the strength of the Indian currency against the US dollar, and therefore its purchasing power against purchasing power of gold, and I think that's much more of an uncertainty looming in the near future.
Now, with the events surrounding Syria in mind, do you think we'll continue to see the kind of breakout in silver we used to seeing in gold during times of war?
I think where we've seen a divergence of the two in the last couple of years has been the fact that gold has been more easily and more fluidly traded as far as the sort of momentum traders in the last 18 or so months are concerned. There's a lot more gold ETFs out there, and I think it was the more obvious vehicle for those traders who were looking to move into the precious metals market. And to a certain extent, silver was rather left behind. Still a number of options available for traders, but it's certainly, as I guess has always been the case, never really got the same limelight as gold did, and as such, it's rather been left in a bit more of a stagnant situation. And although it certainly had a bit of a rally in the short term, I think seeing it anywhere near those sort of $48 level again any time in the near future seems highly unlikely. Again, like gold, it has so many hurdles that it would need to break above in order to see that the bullish momentum traders get involved again.
Let's finish with a look at platinum. It's still a much fought over commodity in Africa at the moment, with mining interests from both China and the US creating heated competition over there. If I was a commodities trader, should I be interested in platinum right now?
I think it's certainly something I would keep my eye on. It's again shown some real resilience in the last couple of months, and I think that's given traders a bit more optimism. And then again, the upturn in the Chinese economy has maybe helped those traders feel a little bit more confident in getting involved in platinum. There have been a number of ongoing issues as far as the supply side has been concerned, with workforce issues in Africa, which is, I guess, the more driving force behind the supply side of platinum as far as the markets are concerned. And maybe unlike gold and silver, it is a little bit more focused as to where the physical supply will come from. And then maybe a clearing up of that African mining situation would help ease the price. And at this point in time, it's still pretty murky over there as far as unresolved issues are concerned with a number of the larger mining companies. And I think that'll probably help support the price in the markets.
Okay, thank you for speaking to Dukascopy TV today. Keep watching us for the next Commodities Corner interview on Thursday. And don't forget, we'll have an update on the situation in Syria for you as well. But for now, goodbye.